Good morning, everybody. Happy Monday. It's February 12th, 2024. And a quick shout out to Abraham Lincoln, who would have turned 215 years old today. So happy birthday, Honest Abe. Born in 1809 and tragically took down when he was president, was assassinated. But 215 years ago, one of the greatest presidents of our country was born. So happy birthday, Abe, Honest Abe. All right. Let's go ahead and get started here. It's time for Daily Bites. Monday morning. We bring these to you Monday and Thursday every morning. Now, of course, next week we won't be bringing it to you next Monday. Of course, Monday is a holiday. It's President's Day. It's celebrating all the presidents, not just Abe Lincoln and George Washington, who comes out with his birthday on February 22nd. But it's all the presidents. It's President's Day, and the markets will be closed next Monday. That's the 19th. So we'll have our next broadcast actually on George Washington's birthday on the 22nd. So let's talk a little bit about markets. It was an exciting day on Friday. Of course, last week on Thursday, the S&P 500 touched 5,000, and on Friday it actually closed above 5,000, as we can see here. 5,026.61. Certainly a huge week, huge move for the S&P 500 to get over this plateau. So it was a nice move. It was on decent volume last week. In fact, we saw good, strong volume across the board on the Russell 2000 on Friday, on the Dow Industrials and the Nasdaq. So what it basically means is that the price move is confirmed by good solid buying. All right, that's all it really means. When you have good strong volume supporting the price action, that's all it simply means. Okay, it's nothing complicated, right? And you can look at all the other indicators and try and see if they line up with the price action of the volume. But as long as you remember, chiefly what we need to pay attention to is the price and the volume, and where they stand, right? If we start there, and then we can trickle down to the second derivative of other indicators and see where they lie. And if they're supportive, that's great. If they're not supportive, well, it's something we have to pay attention to, right? All right. So we have the S&P 500 futures off about 1.75 points. The Dow down about 43, and the Nasdaq off slightly, about 8 points. So it's mostly a mixed market over here. See, volatility is starting to rise up. It went down sharply on Friday into the weekend, and it's just giving a little bit of it back here. Of course, I believe the futures for VIX futures will expire next week, so we have another week to go on that. Oil futures are down a little bit. Gold slightly down as well, to about $2. So we have a big week of earnings coming up, but also economic data, right? So tomorrow morning we have the CPI number, which is going to come out, which is for January. And the Cleveland Fed is looking for about a 1.6 to 1.8% annualized move in inflation for the month of January. So it's about 0.13. And if you annualize that out, all you need to do is multiply that times 12, and you get an annualized rate. Now, so obviously that's not going to be what we get, because you're not going to get 0.13 every single month for the next 12 months, but you can annualize that out and then look and see if there's a trend. What I like to do with inflation numbers is I like to look at a 3-month window. I look at a 3-month trend, and we've certainly been seeing for the if you look at the last 3 months and the prior 3 months and a rolling movement on that index, the CPI and the PPI, we see that inflation has been trending down on that 3-month basis. I believe the Fed looks at this as well too. So it's important to keep in mind. We have 4 Fed speakers today, a couple more later on in the week. So it's going to be a busy week of Fed speak. Today there is an inflation report coming out, and it's not the CPI. What it is New York Fed's inflation expectations figure for the next couple months and maybe next year or so. So that'll be an important read. I think it just came out a few minutes ago. I have to take a look at it. But New York Fed's inflation expectations out today on Monday. Pretty heavy slate of earnings this week, actually. We have Cisco coming out, which is a Dow Industrial name. We also have Coke, which comes out in the morning, which is also a Dow name. We also have names like Airbnb tomorrow night. Tonight we'll have Arista Networks, ANET, which is a name I've been paying attention to. Teradata, which comes out today as well too. TDC, Shopify tomorrow morning. Akamai and AIG tomorrow afternoon. Couple of names on my radar screen. AppLovin on Wednesday night. HubSpot, which is a name that Leanne has been playing quite a bit and done very well with. HUBS is going to be out on Wednesday night after the close, and then DraftKings, Roku, and DoorDash after the close on Thursday. But of course, we'll meet up on Thursday morning with the daily bites before that. So a little bit about the charts here right now. So I want to show you. I want to expand out here on the S&P 500. Let's see if we can get that up here, back up here for you. Okay, here we go. All right. So this is a weekly chart of the S&P 500, right? And this is one that I share with Actioners Plus members on Real Money Pro every week. Every Monday, I bring this out. And we can see some of the lines that I've been drawing in here and changing around for a little while. We can see that the S&P 500 on a weekly basis is very strong. You can see the light blue candles indicate strong bullish trend right now. So teal is more cautiously, but certainly for the past 12, 13 weeks, with the blue candles, it's just been up and up and up, right? There hasn't been anything down. So obviously that scares people when you see a straight up move like this and without much of a pullback. MACD is confirmed, and we see stochastics are embedded. So what does that mean? What does embedded mean? So basically, when the stochastics are embedded, that means that anytime there's a bit of a pullback, the dip buyers are active and they're starting to buy those dips, right? It works until it doesn't work, right? So when these stochastics roll over, like they did over here back in July, right? In July and August, that's when the market starts taking a dip and finds the support level. I've identified a couple of support levels over here. We have the 20-week moving average here. We have this purple line here, which connects the lows from back in October 2022. That's in play, of course, even though it's way far down there. It's down about 20%. We could certainly get a pullback down there, right? And that of course, that line is rising slowly every week. But we get a bit of a pullback. I'm not ready to pull the plug on this support line just yet. Maybe if we get another higher low in place, maybe down over here, I might be willing to do that. But for now, we'll keep that there. Bonds, 10-year yield, you can see it's starting to look positive, bullish on the yield here, which would be bearish on bonds. Of course, we had this big, huge drop down at the end of January after the Fed meeting last month, and then we rose right back up again into the middle of the month here, and certainly if we break out over here on this 10-year up towards 4.3, 4.4, that's going to be bad for the markets. It's certainly bad for the small caps. When interest rates are starting to rise, small caps don't like it. It's like kryptonite for them. So we did see when interest rates were starting to rise in the beginning of January, the small cap Russell 2000 was being hurt the most, right? Now let's take a look at the, I'm going to brag a little bit here and also take a look at the markets. This is the performance of the explosive options portfolio. We had a great week last week. We had a great day on Friday. Of course, we had a huge winner with that Cloudflare on Friday and Thursday as well too. So we had the 85 calls. We rolled them into the 95 calls and closed them out for a huge winner on that day. So huge month so far of February up 11.49. SP 500 not too shabby, 3.78, but we're 3 times higher than the S&P 500 now. Year to date, we're up 7.89%. Let's look at the S&P 500, up 5.42 year to date. For the month, 3.78. Again, that is a strong number for the month. And with about 3 weeks left to go, I can't imagine anything is possible, of course, but I can't imagine we're gonna continue to move higher and get this month-to-date number up into like 6-7%. It just really is a little bit frothy. What would be a decent return for the month? Maybe 2%, maybe 1.5%, 2%. But that would require a pullback here, a retreat from where we're at right now, and markets just are not indicating that that's going to happen. So what does that mean? That means that pullbacks can happen at any time, and we have to be ready and prepared for that. I've been telling the people in the chat room, and I've been telling people even on social media, if you want to listen to me, be prepared and ready for what the next move in the market is going to give you. Right? We don't know if it's going to be down. We don't know if it's going to be up, but we want to be ready for anything. And when that happens, we're going to be able to take advantage of those moves and move accordingly. Whether it's puts, whether it's calls, doesn't matter, right? We want to be prepared, be ready, have lots of cash, have some puts on. Now, I admit I had some puts on last week and they didn't do very well for me, and I'm okay with that because I had other stuff that was working, and stuff in our positions were moving higher, as you can see, right? Okay, and then last thing I want to share with you is the oscillators here, and we see the Nasdaq oscillator. Not quite overbought yet. It's back in positive territory, which is good, which is bullish. The Nasdaq 59, the New York Stock Exchange, up plus 16. Not overwhelming, but still, we were down quite a bit. We're down to the minus 130s just a couple of weeks ago, and now we're back in the positive again. So here's how I would frame this. I'd say that the momentum is strong. Real positive. We're seeing the market continuing to move higher. Here's the SPY, new all-time high on Friday, right? But if these oscillators get into the 120, 130 range, red flag alert, everyone. Red flag alert. So you've got to pay attention to what's going on with these oscillators, and don't just dismiss any rally as okay. Well, let's just keep operating the same way every single time without any fear, without any worry, without any concern. You can't do that, right? You always have to be concerned. You always have to be worried about a bit of a pullback, because especially if you're playing options as we are, right? The decay is going to be a killer, and then if a big moves down, you can go from a 40% gain in an option to a 40% loss in a New York minute, in a snap. Okay, very, very quickly. So we have to pay attention to what's going on around us. Now, that being said, as long as we're aware and we can make an argument for getting long stuff, right, as we did last week, then you go with the trend, right? But when that trend changes or that trend stops or it shifts, you have to be aware of that as well too, and say, okay, well, look, going long isn't working for me right now, but I can raise some cash or I can go short, and I can look for opportunities, especially if the market is giving us signals that there's going to be a risk-off day, for instance, right? And we've seen those things, right? We've seen when markets have sold off like overnight in Europe, Asia. Of course, Asia's closed this week because of Lunar New Year week. We've seen some signals: interest rates going up, gold going higher, the dollar going higher, interest rates going up. These are all signals that the market's going to be on a risk-off mode. Not happening today, right now. Well, at least right now, but we could get that later, or we could get it later in the week, right? So pay attention, keep your eyes open. But there's always some good opportunities out there on the long side or the short side. All right, I think it's going to be it, everyone. But I did want to show you a couple of charts too of names that I'm looking at this week. ROKU is one. I added some of that last week. We did get a couple of closes above 95 last week. I'm looking for a couple of closes above 96 and 97, where I'm going to probably press this one a little bit more. ANET is already up strong this morning. They have earnings coming out later on tonight. This has just been a powerhouse. I may be adding some more of this one this morning. Shopify, which have already been in, they have earnings coming out tomorrow. A huge move on at the end of the week last week, Wednesday, Thursday, Friday, approaching overbought. So we got to pay attention to this one. Probably going to be rolling some of these up, these calls that I have up on Shopify, Airbnb tomorrow, tonight. Tomorrow night, we'll have this one reporting. It's kind of a choppy chart over here. But if it gaps up and gets above 153, 154, gets a couple of closes above there, got some upside to go. So I know the stock got hammered last week after Expedia came out with some poor earnings, and so did Booking. Came down. They didn't report their earnings yet. They're going to be coming out very, very soon. A couple other names that I have on the radar screen, as I mentioned earlier, is this HubSpot high dollar stock, and of course the options are going to be expensive as well too. But certainly this one has got my attention. And then let's see, what else would I have here? We have again Roku, DoorDash. It's one that Dave has been mentioning in our chat room. Been very, very strong name over here. Of course, Uber has been lights out. Had a bit of a pullback on Thursday and Friday. But DoorDash here have earnings coming out this week, and I think this is going to be Tony Zhu, who is the CEO, is going to print up a good number here. And then of course DraftKings. We'll talk about that one on Thursday. They have earnings coming out then. I'm sure a lot of people spent a lot of money in gambling and with the DraftKings app over the weekend, especially with Super Bowl yesterday. I suspect they're going to be talking about some record numbers of money transactions and so forth for DraftKings on Thursday. So that's it. I'm going to wrap it up there, everyone. I wish you guys all a great trading day. It's been lovely to spend a morning with you. And again, be cautious. Take it easy today. I tell you these things not for my own health. I do this thing. I do this for all of you, right? I help try and share with you some kernels of wisdom, some advice from me, because I've been hit in the past, not more recently, but years ago. I didn't know. I didn't have somebody out there telling me to be careful, to be safe, to be cautious, to use puts. I didn't have anybody like that to help me with. So hopefully I'm playing that role for you, and you guys can live to fight another day. That's what it's all about. And I wish you guys all a great trading day today. If you're in the chat room, we'll see you a little bit later there today. I will be traveling later tonight, but I will be in all day tomorrow as well too, and then back on Wednesday morning. So anyway, have a great day, everyone. I appreciate everyone spending a little bit of time with me. And we'll have the chart of the week out on Wednesday as well too. Pay attention to that, and read the Daily Bites today, or read the Market Blast today, and watch more of the Daily Bites on Thursday. Take care, everyone. I'll see you guys all on that. Take care. Bye.